What is going on, investors? Welcome to my channel. This is Jason, aka the Frugal Investor. In this video, we will do a quick portfolio update for this week and the amount of dividend income that I have made this week and so far from my portfolio. Please don't forget to like and subscribe. We do videos like this every week where we give portfolio updates and the dividend income updates. With that said, let's get right into it. So far, the portfolio is up by 22% within the past 10 months. In the past week, the portfolio is down by 0.5%. Now, the past week has been a red week in the markets. The markets are having a red week. A lot of companies are going down or are selling at a cheaper price. For example, Apple. Apple is currently trading at a very cheap price because of the news surrounding its lawsuit with Epic Games and the news surrounding its iPhone 13, which is people, whenever there is a news about Apple's iPhone 13, it generally tends to trade lower than its price. It generally tends to be in the red. That is what I have noticed so far. Whenever there is a new iPhone coming or there is new products that Apple is launching, people tend to be negative for Apple in the long term. But I am very bullish on Apple in the long term because I think this is a very solid business. In the short term, yes, it can be down right now, it can be red right now, but they have so much cash on hand, such a great management team, that they will keep coming up with innovations and new products in the long term. And that is why I'm so bullish on Apple in the long term. Right now it's in the red, but that means it's a great buying opportunity in case of Apple. In case of Facebook, which is also down by almost 3.7% this week, it is also a great buying opportunity. My price target for Facebook is close to $450, and I am more bullish than ever on Facebook. I have never been this bullish, and my price my actual price entry point was somewhere between 295 to $296, but because I keep buying Facebook every month, my price point is going up, and I can control myself because I love this business. I love buying Facebook because I love this business in the long term. This is one of my favorite businesses to hold in my portfolio, and that is what has been in the red this month, and that is why the portfolio is kind of in a bit red for this month, which is a good thing in a way because now I can buy businesses at a better price. PayPal is also down by 2%. Alibaba is down by 4% now because the news surrounding around China's Evergrande real estate news, and also the Alipay breakup that the government is doing over there. Now, Alibaba, I bought this week, but this is the last week I am buying Alibaba. I will not be building up any more positions in Alibaba anymore until I come up with a certain mindset of what the government over there is trying to do. Are they going to screw the businesses? Are they going to screw the free markets? They're trying to take over everything. Trying to force their communist agenda, or are they actually trying to respect the businesses, the free markets, in a way where they let them do their things along with certain regulations? Now, that is what I have to see what the government over there is trying to do, and based on that, I will make my next move in Alibaba if I will build up any more positions. Right now, I'm stopping any buys in Alibaba. I will not be buying any more of Alibaba. So that is what my portfolio is read in this week in the tech sector. Now moving on to consumer sector, consumers are actually doing quite well. Only Disney and PepsiCo is down for this week by a little bit, which is not bad at all because it gives even better buying positions for these companies. Now Disney is no more a dividend play. Before it was a dividend play. Now it's just pure growth and long-term play. Financials, real estate, all doing very well. ETFs are down a little bit. Healthcare is down by a little bit. Industries are down again by a little bit. Industries, I have Canadian Pacific and 3M. Now 3M is selling a little bit expensive right now. The price is a little bit expensive. In my opinion, the price should be somewhere around $150 to $160 to get a good entry point in this business. The dividend yield is great, 3.22%, and that is why I am buying this. That is why I keep buying this. I bought some this month as well, and I will be buying more because this is a great business overall. My price point is $192, and I would love to bring it down to $150, guys. 3M is a great business, but if I can get it at a great price, I will be a buyer. Now, Canadian Pacific is interesting. Canadian Pacific is a railway company that connects the east to the west in Canada. Now, I am thinking about it long term. I want to hold this business in my portfolio, but I also want, part of me also want to get rid of this position by the end of next year, which I will not be doing, but I am keeping that in mind. If I need the money for something else, this is the first position that I'll be dumping. Let's say if the market crashed tomorrow, let's say if the market goes down by 60%, 40%, 50%, this is the position that I'll be liquefying, and I'll be using that money to buy other great opportunities. I'm not a big fan of this company. They pay a great dividend, but they also have a lot of debt on hand, and the management team seems kind of distracted. They're all over the place. I read the transcripts, and they're kind of all over the place. So I'm not really liking that, and that's why I'm trying to see what I'm going to do with this position. Right now, I'm holding it for the next 1 or 2 years, but after that, I might be getting rid of this position if I get any other good opportunities in the market. That is my industry sector, guys. Now moving on to my telecom, I hold Comcast, which is one of my favorite businesses. Family managed business, really nice, really well managed business, and they have so many different subsidiaries in London. In Europe, they have Sky networks. In different countries, they are very well spread out. They have different revenue sources from different continents, which is also always a great thing. Now in utilities, I have Duke Energy Corporation, stable dividend paying companies. I am not really bothering, within the past so far I'm up by almost 10% in growth, and they pay a great dividend as well. So I'm not really complaining. It's a stable dividend paying company, and I'm going to keep it in my portfolio as long as I can see it. So far, the portfolio is doing really, really well. Within the past month, we have made dividends of about $201 so far. Now, the average that I'm making about every month is around $240. Within the past 10 months, I made around $1,937 from this portfolio. The growth has been 22%. Now, before 2 months, the growth was almost 28%. If you guys have been following the channel and the growth of the portfolio, the growth was almost 28%. But with the past month, the market's been kind of down, so the growth is kind of gone down a little bit, but it's okay. I'm not complaining. It's a good time to buy. The market is in the red. It's a good time to build great positions in great companies. So that was a quick update on how the portfolio is performing, how the companies are performing. We will go over some of my biggest holdings once more after we do a dividend income review. Now let's jump on to how much dividends I made this month. This month, I have made dividends from Home Depot, which is $28.04, from Duke Energy for $50.74, from Realty Income for $20.50, from 3M $39.75, Target $23.21, Johnson & Johnson $33.83, JEPI $41.19. Those are the dividends for this month alone. And if I count them up for this month, the dividend income comes up to be $236.20 for this month alone, just in the month of September. And this, we are still in mid-month, so I am aiming this month. I think I will be receiving around $300 in dividend income, combined to other companies that will be paying out their dividends as well, just within this month. So not a bad month at all. $300 in passive dividend income without doing anything, guys. Now this is completely passive income, so I will be reinvesting this dividend back, income back. Actually, I made some purchases this month. If I will show you guys right here. So I will be reinvesting this income back into my portfolio. I made some purchases this month. So I purchased some Alibaba, which is the last time I'm buying Alibaba, because I will not be buying any more until I receive some good news from China. Also, I bought some Apple, which is Apple is down, so I bought Apple, which is a great company again, and it was in the red. Great time to buy. Also, I bought some Realty Income, some 3M, some Johnson & Johnson, and some Alibaba again. So overall, this has been a buying month for me. I have been buying heavy this month, and also more Apple. So whatever dividend income I'm receiving, I'm reinvesting it back. As you can see in Facebook, Apple, Alibaba, Johnson & Johnson, 3M, all these great businesses, I'm putting more money back into them as I'm receiving more dividends, which is getting reinvested, and I'm harnessing the machine of compound interest. Now, compound interest is the eighth wonder of the world. Those who understand it, they make it. Those who don't, they give it. So make sure you're on the right side of the equation and you are harnessing the power of compound interest in your portfolio by dollar cost averaging every month into great businesses, and that is how you can generate good returns over time. Now, this portfolio is a growth, value, and dividend style portfolio. Now, growth, value, and dividend style portfolio is basically I am focused more on growth companies, value companies, and dividend companies. Growth companies are companies which are growing at faster paces, like tech companies, Google, Facebook, Apple, companies like that. Value companies are companies that are available at great prices. For example, if the intrinsic value of the business suggests that a stock price should be trading at, let's say, $100, but the company is trading at, let's say, $95 or $102, $103, that is a great value company. Now, dividend company is company that is pays out a stable dividend, like a Realty Income Corp, like a JEPI ETF. Now, these are dividend plays. So I am focused more on growth, value, and dividend plays. Now, biggest part of my portfolio is in the growth sector, which is in the tech sector, and it has seen a good amount of growth in the past, I would say, 10 months, about 26%. Financials is the biggest growing sector, which has seen a great amount of growth, almost 47% just in the past 10 months alone. Now, that is what I'm focused on. The mission of this portfolio is to help me achieve financial independence. Now, financial independence, what I'm looking for in this portfolio, when this portfolio matures, I will be taking some money out from this growth companies, and I will be putting it back into these dividend companies so that I can increase the dividend yield that I'm getting every month. And I don't have to work for active income, and this portfolio can generate me some passive income based on which I will be able to lead a happy life, and I don't have to work at an active job to generate that active income. That is the mission of this portfolio, to achieve financial independence in the long term, to harness the power of compounding, to harness the power of great businesses at great prices, having which have a huge moat, which have a huge margin of safety, and using it to get independent and using it to get financially independent and basically retire. The biggest holdings in this portfolio still are Google, Apple, Facebook, JP Morgan, and Chase. JP Morgan and Chase is more of like a savings account. Instead of holding a savings account in a bank, you just buy JP Morgan and Chase stock and you just hold it for the long term. It serves as a savings account, plus it also gives you a great 2.7, 2.8% dividend yield, which increases every year. So that is also a very beautiful thing to have. Followed by JEPI, which gives me a 7% dividend yield, which is a very high dividend yield. It's a cover called ETF. So this is like my savings account. Instead of having a savings account, instead of having a, say, in a bank which gives me like less than 0.0 something interest rate, I just hold stocks like JP Morgan and Chase, 3M, JEPI. These are like a savings account. So that is a quick update on my portfolio. We have made about $1,937 in the past 10 months, coming out to about $230 to $240 per month in dividend income. Goal is to make it to at least $3,000 per month. We got a long way to go. At least 10 times the size of this portfolio will make it happen for us. So we got a long way to go, guys. But we are steadfast ever forward on our journey of financial independence, buying great businesses, using the power of compounding, staying in the markets, dollar cost averaging into great businesses, finding value deals here and there, buying blue chip companies which have a huge moat, which are available at great prices, and using that power to get our goal, to get our mission of financial independence. If you have not started, start now. If you have started, keep on dollar cost averaging. If the market goes down, you buy. If the market goes up, you buy. Don't sell. Keep dollar cost averaging. Use the power of compounding for your benefit to achieve your mission of financial independence. So that was a quick update on my portfolio, guys. This is a frugal investor. Please don't forget to like and subscribe. We do updates like this every week where we go over what we bought, what we sold, how the portfolio is doing so far. This is the frugal investor signing out, and see you in the next one.